Hi, this is Tony Jeff with Innovate Mississippi. We're going to go ahead and get started. Appreciate everyone for joining us here today. I have recorded the meeting. I'll mention later. We'll include the link to the recording of this. We're very excited to have on the call today a couple folks and experts to talk on the various aspects of this. Matthew McLaughlin with McLaughlin PC, and Bill Guyan with Renaissance Bank, and then I'm going to follow up with a few other points. So with no further ado, I'm going to hand this off to Matthew McLaughlin. Matthew, you should be unmuted, so please go ahead and make sure that's the case.
All right, sounds good. Thanks, Tony. Welcome, everyone, this afternoon. I am going to kind of go through some of the issues that we have been dealing with over the last couple of weeks, which I think it will provide a nice sort of foundation as we work our way towards the stimulus bill and Bill's discussion of the PPP loan program. As many of you probably know, we are a Mississippi-based law firm that does work throughout the southeastern United States. We work with a bunch of clients that transcend various industries. We work with a bunch of alcohol manufacturers, but also work with technology and innovation-based companies. And all of our clients, regardless of what industry they are in, have been dealing with coronavirus issues that fall into really two distinct baskets over the last few weeks. And we have been trying to help get answers and get information and help our clients make decisions in these times of extreme uncertainty. Next slide, Tony. Next slide. Okay, so the first wave of these issues have really kind of fallen into the category of employees and the general public. And we've never, at least in our lifetimes, dealt with a global pandemic of this effect, and it's caused a lot of us to sort of pivot and move in very different directions and have to make very, very difficult decisions about employees, whether that be furloughing employees, whether that be implementing processes and procedures to get employees working from home and how to monitor those employees. At the same time, too, there are lots of questions about how our business operates within the general public. With employees, keep in mind that, sort of the baseline is following whatever written policies and procedures your organization may have. If you're an early stage startup, you probably don't have any policies or procedures are written. Or if you're a mature company, you may not have any policies and procedures written, but to the extent that you do, make sure that you're following them. I think it is very helpful to be extremely transparent with employees about this particular virus in terms of how you communicate what the risks are, encourage people to make sure that they are taking care of themselves. If they feel like they are having symptoms, not to come in to work and do things that for the most part you would think are common sense, but judging by the number of people that we have seen out and about on the streets and doing shopping, it may not necessarily be common sense for everybody. Understand, though, that as you deal with employment-related issues in this time of uncertainty, that general labor and employment decisions and how you treat and deal with employees are often governed by very complicated and sometimes seemingly inconsistent overlay of federal and state law. And as it relates to the coronavirus, these laws are changing almost on a daily basis. The Families First Coronavirus Response Act was the second major legislative initiative that passed Congress a couple of weeks ago that provided mandatory pay for certain employees that have to stay home to either deal with the coronavirus because they're either sick or they've got children that can't go to school. So that was the first federal law that was passed that specifically addressed this particular situation, but that doesn't mean that any other federal and state laws that apply to how you treat or deal with employees are trumped in any way. How we do business and as it relates to the general public is something that a lot of us probably may not have dealt with unless you're in a particular industry that invites the public in, like restaurants and bars and breweries and distilleries and things of that nature. But we're having to deal with it now as CDC guidelines and other guidelines from OSHA and other federal agencies have dictated or limited the amount of contact that we can have with other people, limiting the number of individuals that can gather in a particular area, making sure that we remain more than 6 feet away from people. We are now having to deal with what our business and how our business interacts with people in light of these guidelines and in light of these shelter-in-place orders that have been issued. The governor issued a shelter-in-place order for the state of Mississippi yesterday. Mayor of Jackson issued one yesterday or the day before, essentially closing all non-essential businesses. So the question becomes, is my business essential? It's a fairly broad list. If you look at the governor's definition of essential business, some municipalities have narrowed the scope of what an essential business is. If you are an essential business, how do you make sure that you get employees to where they need to be without causing problems for other people? We have been suggesting to clients that they provide a company letter to all of their employees that they can keep with them to show to law enforcement if they happen to get stopped or happen to get questioned for why they're out and about. Next slide. The next kind of wave of questions that we have been hit with fall into sort of the finance and operations section. So, people have dealt with employment situations the best they can over the last couple of weeks, and it's sort of forced people to start thinking through, okay, I really have got to figure out ways to manage my cash flow, my outflow of cash. What am I going to do with my how am I going to handle my business operations? So these questions are, naturally, can I obtain loan forbearance from my lenders? Am I in default under a loan agreement or some other financing arrangement with somebody that I have either borrowed money from or taken an investment from? Can I get relief from rent payments from my landlord? All of these questions are largely dependent on, one, who the counterparty is that you're dealing with, and what the contracts, what the agreements say. I will say that most of our clients have had a high degree of success working with existing lenders, existing landlords, and other customers and vendors and suppliers, people that they have contracts with to sort of provide some short-term relief. This has obviously impacted our business operations considerably. With these shelter-in-place orders and closure of non-essential businesses, you have some businesses that are completely shut down or have been totally or significantly limited. These folks aren't left with a lot of good options at this point. Other businesses that are either essential or have gone, completely remote are dealing with another set of issues. They are staring down lags and delays in cash flow. Accounts receivable probably are not going to be coming in as quickly as they otherwise would. And they have increased costs associated with making sure that their employees have access to the appropriate technology and tools that they need so that they can do their business. Next slide. So outside of sort of the employment and the more finance and operational issues, we've had a number of questions for about the last 10 days about the stimulus bill. The CARES Act was passed last week, heavily debated, a lot of back and forth, some procedural difficulties getting the bill through the Senate and the House with certain members of Congress being at home and not being able to travel. But the CARES Act was passed last Friday. It was signed by the president immediately. It's about a 900-page bill that fundamentally is designed to put people back to work, keep people in their jobs, provide business support and financial support to individuals to try to make it through this particular situation we're dealing with right now. We have focused primarily on the tax provisions and the loan program provisions in there. There are a bunch of other provisions that are specific to industries like healthcare and things of that nature. So if you have specific questions about those, let's chat offline. But there are 3 or 4 key tax provisions in there that I want to note. The employee retention credit for employers subject to closure. There's a 50% tax credit for wages paid by employers during this crisis. There's a delay mechanism where employers can put off paying the 6.2% Social Security tax on employee wages. That will end up being paid by the employer in 2021 and 2022. There has been a relaxation of some of the net operating loss rules, which will allow businesses that have suspended or held net operating losses from 2018, 19, or 20 to use those, carry them back. Typically, you would just have to keep carrying them forward, but you can now carry them back, file amended returns, and realize some financial benefit from those net operating losses. And also the CARES Act does modify certain limitations on the losses for taxpayers that are taxed as pass-through entities. There are other tax provisions in there. There's the rebate, obviously, that most people have heard about that's going to put $1,200 in the pocket of most Americans, subject to some certain adjusted gross income limitations and phase-outs. And there are some loan programs in there, most notably the Payroll Protection Program, which the SBA and the SBA lenders throughout the country have been gearing up for, which is supposed to go live tomorrow. I am going to let Bill cover more of the details surrounding that. This is a very quick seminar, very quick presentation. We can't get into a lot of the details on a lot of this. So if you do have questions and would like to pose them now, I think we've got a few minutes for questions directed at me, and then Bill is going to take over and talk about the PPP 7A SBA loan program. The presentation does provide some links here to our website. We have been trying to put out timely and relevant information as quickly as we possibly can. So you'll find these resources there. But if you have other specific questions, feel free to just email me or call me, and we'll be glad to kind of help you talk through what your issue is.
And we do have time for questions for Matthew before we go into Bill Guyon. I would ask if you have questions to submit, please use the chat box, which can be opened from either the top or the bottom menu if it's not already open on your screen. As well as if you want to raise your hand, I can also unmute one at a time to be able to handle questions.
Hey, while we're waiting for people, can you hear me?
Yes, we can hear you.
While we're waiting for people to ask questions, there were a few that people sent in when they registered. I wondered if you might want to go ahead and address. Matthew, so a couple of people asked, outside of, under the CARE program, outside of PPP, what are some specific, grants or loans or anything else that they could be looking into, or maybe a link you could send them to for more information about that?
Yeah, so, outside of the PPP program, there is a sort of a tranche of money, about $500 billion that is set aside primarily for, the airline industry, cargo, transportation, some healthcare related industry money. And it's kind of a general catch-all for anybody that doesn't otherwise benefit or is not eligible to qualify for the PPP program. I don't know of very many Mississippi businesses that would sort of fall over there. I think the PPP loan program is going to be the best and most advantageous tool for most people on the call here. In addition to those loans, you have the standard kind of emergency economic impact disaster loans that were opened up through SBA, I guess last week or the week before, when the governor declared a state of emergency. That was a trigger to authorize the SBA to open up that funding mechanism. I don't know if Bill is going to get into kind of the differences between the two. You can apply for both. You can receive both. You just cannot use both loans for the same types of expenses. The EIDL, which is the emergency or the economic impact disaster loan program, That is not forgivable. CARES Act did very little to change that program. That program has been on the books for a while. It did open up the definition of eligible applicants to extend beyond just the traditional, businesses that could apply. That's another tool out there as well.
Tony, any other questions come through? Or
well, I think, yes, it looks like there are a couple of questions. I may, Matthew, either be for you or Bill may cover these, but there was a question about can you use the Paycheck Protection Plan if your business hadn't started up as of January or February and didn't have payroll expenses then, as well as the difference between EIDL and PPP. I think Bill is probably going to address those, but if you have anything to throw in, Matthew, let's go ahead and do so.
Yeah, so the EIDL, Greg, is not forgivable, but the PPP is forgivable. And Bill, I'm sure, is going to kind of walk through the formula of what percentage of the loan is forgivable. Andy asked, what's the difference between the EIDL and the PPP loan program? They're both programs that are offered through the SBA. The EIDL is it's the Emergency Economic Disaster Loan Program, which requires a declaration of a state of emergency, which we got a couple of weeks ago by the governor. The difference, one of the practical differences is the EIDL loans you apply directly to the SBA for. The PPP loans you're going to apply for those through SBA approved lenders. And again, yes, the PPP, there's a portion of that is forgivable, but the EIDL is not. There was another question. Is there a way to submit a PPP application if your new business did not have January or February payroll expenses? There is a date in the CARES Act that you have to be a business prior to that date in order to apply. I believe it's February. It's a date in February, so you may satisfy that. I don't know that you can apply if you do not have payroll expenses. I mean, that is kind of the trigger, and that is the basis for how the loan is determined. But there are lots of unanswered questions at this point, and we hope to be getting more guidance from the Treasury as we get closer to rolling this out.
And Matthew, that's probably a great transition to hand over to the next speaker, and then we can handle some of these questions if Bill doesn't cover them in his presentation already. So Matthew's going to be sticking around for some Q&A, but with no further ado, I want to move to our next presenter. Bill Guyon is a SBA banker and Senior Vice President with Renaissance Bank. Bill, I believe you're unmuted. Can you confirm that for me?
Yes, Tony, thank you.
Okay, and I'm going to just go to your first slide and take it from there.
Very good. Thank you for having me today, and appreciate Matthew's comments. He's very well versed in all things that are related to this legislation, and this is monumental legislation for us. $2 trillion that was passed by Congress and signed by the President on 3/27. And my part of this webinar is to speak specifically to it's actually Payroll Protection Program. This slide right here is a slide that came about with the passing of the Senate's version of this. There have been some amendments, but in short, and going back to Matthew's comments, there are two loans: the EIDL loan, Economic Injury Disaster Loan, that SBA has in-house. This has been part of their fabric since they were formed in '53 to handle regional disasters to the best of their ability. So it rolled out on 3/20 when Mississippi was declared a federal disaster area for COVID-19 and was made available. It was overhauled last Friday, process made a little more streamlined, and as I understand it, the first $10,000 of the money that you borrow from them in this disaster loan program is forgivable. Let's see, that is, and you're eligible to draw up to $2 million in this particular program, whereas the PPP loan has a $10 million ceiling on it. PPP, Payroll Protection Program, The total funds allocated there were in the $350 billion range. And these funds are made available to help businesses and their employees weather these uncertain times and the pressure that we've felt as a result of the pandemic in the second quarter 2020. So that having been said, the factor for qualifying for this loan or your loan amount is based on your average monthly payroll for 12 months. And there's been some discussion about whether that's rolling 12 months from the date of application, meaning from March of 2020 back to February of 2019, or if that is the calendar year 19. SBA, I believe, has given us the calendar year 19 because that information is readily available to CPAs and is more easily accessed than the rolling 12-month average. But at any rate, that factor allows you to borrow up to 2.5 times your average monthly payroll to pay your employees who may be home right now as a result of shelter in place and businesses being darkened from the pandemic. And it stabilizes them and their income, allows you to maintain your workforce during this time, and hopefully at the end of second quarter, we'll see some relief from the pandemic and be able to get back to some degree of operational ability in our economy. In doing so, the employer is rewarded by maintaining those employees and keeping 100% of them on his payroll or her payroll with a forgiveness clause. So that money which you have borrowed may be completely forgiven by the SBA and paid back to the bank so that the borrower has no responsibility whatsoever. Of course, the banks are using their capital to fund these loans. The Treasury is not going to penalize the banks for their mass push of this capital out into the field and to these business owners. There are no fees that are paid by the borrower for these loans. SBA pays the banks to administrate those. Again, we spoke to loan forgiveness. You can use, if I understand correctly, and Matthew, please feel free to interject, but you can use 25% of your loan proceeds amount to cover mortgage interest expense, rents, both of which were established prior to February 15, 2020, utilities that were turned on prior to February 2020, and associated payroll expenses. Now, again, that's part of the allocation or the parameters that allow the business owner to realize the 100% forgiveness clause. You can just go to the next slide, Tony, please. Okay, there are some excellent resources out there, one of which I have found is the U.S. Chamber of Commerce Coronavirus Small Business Guide. They did a very good job of, and I'm sure Tony has some resources through his firm, of breaking down the act, answering questions specifically in a very straightforward fashion. I've used it for reference quite frequently, and it's very well presented. I would encourage you to go and look at that if you have an inclination to apply for the loan. Most banks throughout the United States are participating in this program. We are expecting to process these loans on Friday, or begin processing them on Friday. So if you're interested and you want to make an application, it's a pretty straightforward process. We have on our particular website the information needed for you to apply. The application's on there. Questions related to the information that you may have needed to support that application are on there. So you can access that, or you can contact me directly. I'll be happy to help you in any way, as will any of our bankers in this market area. It's a great program to help businesses in the short run, and it is forgivable, and we're grateful to have it, and we look forward to administrating it to the public in the coming days.
Hey, Bill, there were a couple of questions submitted. The first one around like pass-through entities that don't have payroll exactly, like an LLC that does disbursements, and whether those might be eligible, as well as a question on 1099 versus W-2 compensation.
Right. I'll speak to the 1099 compensation since that was the later question, but we'll get back to the other one. You are eligible, if you are a contract employee, to apply independently, as I understand it, for a payroll protection loan if you have received economic interruption or injury as a result of the virus. Again, this process is very streamlined. There are no credit checks. There's no credit underwriting. They do not require you to personally guarantee the loan, and they do not require that you provide collateral. So it is a very streamlined process to get funds to the public, or rather the employees of small businesses, and help small business owners secure their staff for future business operations. And the other question was, Tony, remind me again?
So if you have like a pass-through entity like an LLC that does disbursements to the LLC members but doesn't show payroll in that example, how is that handled here?
If I understand correctly, and again, we haven't gotten complete guidance from SBA on how this will be administrated and those qualifications. We're still waiting on that as we speak, as far as I know. Payroll expenses would include guaranteed payments to a business owner. Draws, however, are not included in that aspect. But again, that's subject to further confirmation from SBA when we get final guidance from them, which we hope will be forthcoming today as we go live tomorrow. We're all anxiously awaiting that, Tony, and unfortunately it's coming down to the wire until we get it. So there'll be a lot of lamps burning tonight to try to digest the information and implement tomorrow effectively. Let's see. Andy has a question. I do not have full-time employees, only very seasonally. I am maybe a one-woman show or business. Would it be better for me to do the EIDL, or can I qualify for unemployment as a self-employed person? I own a LLC. Seasonal employees, they do have a provision for that in the PPP program. I would encourage you to go to that Chamber of Commerce website and read the qualifications there. It speaks to full-time, part-time, and seasonal employees and how to calculate that. It's good guidance. Kevin Loud asked a question, how many years is the loan amortized over? That's a great question. The law started with a 10-year amortization on these particular loans, as I understand it, and the interest rate is 0.5%, and the loan is to be paid back in 2 years. However, you get a 6-month deferment of principal and interest on the PPP loan, and as I understand it, it's a 2-year term on that right now with 6 months deferred and possibly 100% forgiven. W.J. Dukes, I thought I read that self-employment income would be treated as payroll. Wouldn't that cover pass-through LLC situation? It possibly, however, again, I don't have final guidance to tell you explicitly yes or no on that question, and we all sit at the same crossroads waiting on that from SBA. I'm sorry that I don't have further information for you.
Well, and I'll throw in here, this is Tony Jeff. We did have communication today with the SBA Mississippi office, who mentioned as well that as soon as that guidance is available, they're available to help, and there are going to be some additional links to the SBA direct information, and the Mississippi office is also awaiting some of that guidance to then be able to help some of the Mississippi businesses as well. Are there any other questions? I'm looking, this whole raise your hand thing means I have to scroll down the whole list of participants every few seconds. If someone does have a question, please do let me know. By raising your hand, you can do so through the participant list, or you can type it into the chat as others have done.
Hey, Bill, as they're, filling out their loan applications, what are things you would be looking for? Or also what would be, mistakes you might anticipate that might hold up the loan process? What are some, just some practical tips as far as filling out the loans?
Well, that's a very good question. The application is very abbreviated. It's available on the Treasury website. It's version 3 is what we have right now. I understand today that another version of that application came out. However, it seems to have some holes in it. We don't have completely clear confirmation from SBA that version 3 is what we're going with, but we are providing that to our borrowers as a means to get started. We feel like that whatever comes out as a final draft will be very close to that. In addition to that, we're providing a payroll calculator. It's an Excel spreadsheet, allows you to put your information in from the previous 12 months, calendar year 2019. And again, the rolling year or calendar year is still up for debate also. The law actually says rolling 12 months preceding the application date. But again, SBA found that information might be more readily available if we use calendar year 2019. So we're asking to complete both. If they have it, that along with supporting information, whether that be Internal Revenue Service forms or ledger information from QuickBooks, canceled checks, anything that you can use to document effectively and officially that you can support, we would like to have in conjunction with that worksheet and application to process the loan. As I understand, there's not going to be any credit underwriting, so we won't need any historical financial information with respect to tax returns, balance sheets, or income statements. In addition to that, there is some reference in that application regarding affiliates, and SBA has a pretty good reg on what constitutes affiliates for the purpose of this application. It's 20% ownership. You have to bring those companies in and notate that you either have ownership or management control over those companies. The documentation there is listed on the application that you'll need to submit to verify that and to present that to your lender. But we expect that the process is going to be abbreviated. So far from customers that we have serviced on questions, seem to get the gist of what's being asked, and we expect the process to go very smoothly once the information is in hand, and the turnaround time could be as soon as 24 hours. So we're hopeful that we can execute that. That's yet to be decided, but we're looking for a very fast delivery and fast funding of this particular relief package to the public.
And Bill, we may want to just stick to some of the high-level questions here for a minute. I did not point out when we started, but we actually have a little deeper dive Q&A scheduled here at the end as well. But one of the questions that was asked, I think is a real good kind of higher-level question. What kind of main documentation do you need to document the average payroll?
Specifically, your W-3s from your Internal Revenue Service. Again, people that have quarterly payroll reporting that they do, we've used that as a basis, and we're not requiring specific sources for that information because we understand that everybody has access to different aspects or different levels of that information. We do ask that you be able to support it if called upon with additional information, supporting information, and we hope to make the process as abbreviated again and as efficient as we possibly can.
And what about related, so compensation, insurance and taxes related to compensation, specifically unemployment insurance, more indirect ones though, like unemployment insurance, workers' comp, how are those able to be included in payroll or not?
Things that for employers, the things that constitute payroll costs include salary, wage, commission, or similar compensation, payment of cash, tip, or equivalent, payment for vacation, parental, family, or medical or sick leave, allowance for dismissal or separation, payment required for the provisions of group health care benefits, including insurance premiums, payment of any retirement benefit, and payment of any local tax assessed on the compensation of the employee. For sole proprietorships, it's a little different. Independent contractors and the self-employed individuals, the payroll costs are defined as the sum of the payments of any compensation to a income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment or similar compensation, and that is an amount that is not more than $100,000. They do put a limit on that. Your employees you have that are paid over $100,000 a year are limited to only $100,000 for purpose of the calculation.
By the way, I apologize. We just had someone indicate they're having trouble hearing at the moment. If anyone else is having that trouble, please do include it in the chat. I'm going to unmute everyone, and I'm just going to generally ask the question if you can hear us at this moment.
I'm muting everyone.
It sounds like we can hear other people.
I can hear you.
Hear us.
Yes.
Sounds good.
I'm fine.
Okay. We mute everyone as well.
We're good.
I can hear you.
Okay.
Good.
All right. I apologize for that. I now have to, because of the way the buttons work on here, unmute Bill as well, and give me just a moment, and we will move to the some of the slides that I want to do, but want to quickly wrap up here with Bill. Give me just a moment. Okay, for some reason I've lost. There you go, Bill. Sorry. You're unmuted, and I'm going to unmute Matthew as well, and then we're going to move on here in just a minute. But any closing thoughts, Bill, from your presentation?
Yeah, and I'll just say I saw Kevin had asked the question, what is the holdup for the SBA banks going live tomorrow? Unfortunately, given the magnitude of this legislation and the time frame with which we had to implement it, SBA has 15 days, if I understand, Matthew, from the date that the legislation was passed to enact this. We're trying to get it to the public as quickly as possible, going live Friday. It's just a matter of authoring and publishing that information in a manner that can be used on a broad scale to banks across America to get this in the hands of the business owners that need it. So unfortunately, sometimes the wheels do not turn as quickly as we would like. However, we remain patient and vigilant, and we're trying to work and accomplish those things that we can in the short run to be prepared when that final information comes about that we can implement.
All right. Well, I'm sorry.
Yeah, Kevin had mentioned what are the main documents required to document the average payroll. You know, W-3 and the 940 for 2019 are good supporting documents that you could use from the Internal Revenue Service. Other than that, again, we were using what we can in an official capacity.
All right. Well, great. Well, thank you so much, Bill, for your time on this. We're going to get into some further questions and as we're going to continue moving along, though, in the interest of time, and then come back to a Q&A there at the end. Please, if you do have questions, please continue to submit them through chat. We will also probably ask if your question's not addressed, that I might ask for your email so that we can then try to address it individually later. I'm going to move into some other important considerations. This would be similar to what Matthew described as kind of the wave one. We've been getting a lot of questions about, well, what do we do? What does our startup do in this context? And kind of organizing those thoughts into a couple different things, specifically communication, forecasting, and then remote work management. The communication piece, I want to move, it's just so critically important that all stakeholders be informed of the situation so that they're not caught by surprise. I've been in a lot of conversation with investors, and the Angel Capital Association has held a couple of seminars on angel investor communications with their portfolio companies and the like. I can't emphasize enough how important this is on a regular basis, but especially now to have succinct but regular communication with all of the stakeholders and make sure that you really are thinking through the whole list of those. I thought it was a really great point an investor made that the way your communication is received now is probably more of a reflection on the way you normally communicate than it is the current situation. So for example, if someone only calls when there's a problem or only communicates when there's a problem, then it's probably going to be, the way that communication is expected today. It's a little bit too late to fix the prior context for that communication, but obviously you can fix that on an ongoing basis. The other piece I would kind of throw in is to provide consistent, up-to-date information because, this may be especially true in Mississippi, but I think it's true anywhere. If you're communicating one message to one group, another message to another, it's probably not going to be long before that inconsistency is realized as a result of that. So keeping consistent communication and still doing so on an up-to-date basis. I'm going to quickly go through these because I know we're going to have a lot more questions. Also, we've been working with several companies on trying to make sure to forecast literally every single scenario they can come up with. Obviously, they're familiar with the revenue issues and delays in payments, and order suspensions that they're seeing, but I think it's important that they model each of those scenarios, and that along with the prior point, the models are important for communicating to stakeholders. They're going to feel a lot more confident about your communication if you are communicating how you are potentially modeling different outcomes, preparing for those outcomes. That information is important for instilling confidence with the stakeholders, as well as just so that they are aware of that. They may be able to contribute in other ways to that information on the modeling side. And then, we think about supply chain, oftentimes we're just thinking of, the product, but in many cases, the contractors, others that you rely on have been affected significantly through this. I think the information there is just as important in terms of, getting information out and getting information on what operational impacts they have to their organizations that could affect you. And then not forgetting about, people may think about, well, I'm now into April, so we obviously have, before the tax deadlines have been extended, the personal income tax and other filing deadlines, some of which have been extended, but also thinking about those quarterly and annual functions that may happen during this important time frame as well. And then finally, of these, managing the remote work environment can sometimes be a very difficult situation, but I do think it's also important to think about. There are many people who are doing remote work today that have not chosen to do remote work previously, so that while remote work has been growing, all of those employees were for the most part choosing to work in that environment. Now many are cast into what is a very unusual and stressful environment. So I think each organization has to obviously look at the type of work that's involved and whether or not systems and technology solutions can be deployed to think through those Matthew may have additional thoughts on some of the compliance issues, but we've already seen some folks struggling with signatures and processes that are in place in a remote working environment, and how best to do that versus their norm. I also think, each company culture is going to be different in that regard. So even if it just means having a periodic, no real agenda, but let's just see each other kind of a Zoom meeting to make sure and keep within the company culture, if that is the company culture, I think is an important one. And then I think the communication, again, becomes an important aspect to ease stress and to set everyone's expectations. Obviously, knowing and communicating what employees are supposed to be doing, as well as external to everyone. I think a perfect example of that, I was on a phone call today where the on hold message mentioned that they apologized if you heard kids or dogs in the background, but all of their workers were working remotely, and that was just a sign of the times. That I thought at the time was a very unusual message to have in your on hold message, but I think it makes perfectly good sense. And lo and behold, we actually heard a dog in the background later in the call. So I think that's the type of communication externally that could sort of let everyone know the context of what you're doing as well. I kind of flew through that section, but would be wanting to handle questions on that or overall questions. What I'm going to do is I'm going to continue to try to monitor the participants. If you put your hand up, there's a function that allows you to put your hand up. I can unmute you for a specific audio question.
Hey, Tony, there was a question about that came in, typed in about SBIR grants. Can you address that? It's the question is, if a startup has been awarded an SBIR grant to start in September, are SBA or other bridge loans available that would fund R&D grant expenses starting in June or sooner?
I do think that's a good question. I just have no idea the answer to that question. I think under the PPP program, those anticipated funding items wouldn't qualify based on my understanding of the rules, because they wouldn't have been in operation with those expenses as of February 15th. I guess Bill or Matthew, any further thoughts on general bridge support available for businesses during this time?
Not through the CARES Act. I mean, this is money for a very, very specific purpose, which is to keep people employed and to keep money sort of flowing through businesses to keep employees on payroll. I mean, there may be other financial tools out there for something like that, but not necessarily under the CARES Act.
I saw there was another question too. If the Mississippi banks don't go live tomorrow, can other banks, other states? I don't think there's a difference at all between where everyone is in that.
This is not a Mississippi bank issue. This is going to put an incredible amount of overall stress on all bank processes and on the SBA. It's not a Mississippi issue.
Another interesting question. Are there, like emerging business sectors have come about due to the economic shift? Or what would be some emerging business sectors? What do y'all think?
Gosh, it's such a broad question, and I may want to not focus on those that are more theoretical at this point, but obviously we're on a Zoom call. And I have had probably a dozen people ask me, not business people, but where did this Zoom thing come from? Because everything from school to everything else is being done through Zoom. We have other companies that do remote broadcasting that have seen big explosions in the educational space and their usage in churches as well. So there's going to be a lot of those, but yeah, it's a tough question.
To add to that, Tony, I think the other thing we've seen are a lot of inefficiencies in how our healthcare system is administered, from the top all the way down. I think health analytics and health data, which was already somewhat of a sort of emerging industry under healthcare, is going to become even more important beyond this. I mean, I think this is going to fundamentally alter how we live our lives in a very similar way to how 9/11 fundamentally changed how we travel and interact with other folks. So I think the possibilities are limitless with this, to be totally honest with you.
By the way, there was another question about K-1 income, and I'm not the right one to answer that. I think from what I've heard described, and Bill and Matthew jump in, I think required distributions, and I think Bill touched on that a minute ago, can be included, but generally that would be the only way in which K-1 income would be applicable. But boy, I'm completely out of my element in answering that question.
Yeah, Tony, I think that's consistent with some conversations that I've had with some CPAs on this that have looked at it.
Okay. All right, I'm going to go back through the questions here because we really do want to have a chance to do that. By the way, and I'll go ahead and we're going to continue with the questions, but I'll share the slide because I've had people sending me private messages. This entire webinar has been taped and is being taped. The link to which is here on the screen as well. But if you just go to innovate.ms, the COVID-19 info link at the top would take you to this. Usually Zoom takes an hour or two to update it, to save it to the cloud, but as soon as it's done, we'll have it out there. So people had asked about slides through a couple private messages, so certainly we'll get those, you get that information through the recording of this. So.
There was a question about early stage startups with expenses that are greater than revenues. Are they eligible for any of these programs?
Matthew, jump in. Well, the PPP program is not related to your profit or loss or other ongoing operations or creditworthiness. It's purely based upon your payroll costs. So it would be your expenses versus income on that wouldn't be relevant, except to the extent that your expenses were payroll.
I would agree with that, Tony. And then I think on the economic injury disaster loan program, I think that is a function of sort of lost revenue because of this. So I'm not sure that the net, the net loss there is necessarily relevant as well.
All right, I'm scrolling through. It sounds like, interestingly enough, even though this will be kicked off in less than 24 hours, there's still a lot of questions. I really thank Bill for being on, and I think for those of you who have a local banker that you're already close to, I think that's the proper question to be posing them, because each of the banks probably have slightly different processes, even with the exact same form and exact same rules. How you submit and those things, I'm sure, will vary. But I think it would be interesting to see here. We wanted to go ahead and do this today because the program kicks off tomorrow. It is interesting that here we are, on the afternoon before at 4:24, that we're still so uncertain about certain elements, but we're trying to cover those as best as we can. There's a question, and this one gets, I don't know that I understand this answer as much as I've read. Matthew, maybe you can give some more light, but the how the 1099 person is forgiven, and whether that's handled through the individual receiving the payment as an independent contractor, whether that 1099 is being counted as employment, as payroll by the employer or the person paying them. Is there a good resource for how that person is being handled, the 1099 in this environment?
I haven't seen one, and it does create kind of an interesting situation where you have an employer that could potentially claim, a 1099 independent contractor as part of their base for their calculation, but that 1099 individual also independently as an independent contractor could apply for the loan by his or herself or through their entity. I haven't seen anything up to this point that specifies, what is going to happen in those situations. But the 1099 person will be forgiven, I think, much the same way that any business is. You're going to have to demonstrate at the end that the loan was used to pay for eligible employment-related expenses as well as, you know, utilities or rent or something of that nature.
All right, I know, Janet, you'd been receiving questions as well. And then I see another question here. Yeah, what happens if there are more applications than there is money, than the $349 billion that are set aside? I think the answer is essentially that the money runs out, but I think there's also the expectation that Congress would add to that.
Yeah. I think that's right. I've talked to about 10 different bankers over the last 3 to 4 days, and the sense is that they're all about to be totally overwhelmed with application, and the sense is that this money is probably not going to last very long. I know there's been some talk about a second round of kind of stimulus, stimulus legislation, and I would presume if this is oversubscribed to the degree that people believe it will be, that Congress will go back and reallocate an additional sum of money for this, but there's certainly no guarantees.
All right, we've tried to summarize some of these questions because as I'm looking at both those submitted prior to these and this list, we haven't directly touched on some of these, even though we've danced around or mostly covered some of them. I think what would be useful here as we wrap up, because we want to be very cognizant of everyone's time and other commitments. If you do have a question that you want to have addressed, we can share those questions. I'm not sure we can guarantee the answer as soon as possible, but we will certainly be willing to do that. If you want to put that in the chat to Innovate Mississippi privately with your email, or if you don't care if everyone else has your email, however you want to do that, but we certainly could do it that way to follow up. We also would have the contact information through our website to submit additional questions that we can try to track down. Obviously, at Innovate Mississippi, we're really about helping technology startups, but we want to give those connections as possible. So we would most likely be referring your question to someone else to answer, but hopefully they would be able to answer on a somewhat timely basis. Interesting question here. Let's see here. If they've got a company where the founder has been deferring, founders have been deferring salaries. Matthew, is there any way that that gets included in any meaningful way?
I don't know the answer to that. I mean, the whole loan is premised on the concept of payroll expenses and payroll costs. So I would want to give some thought to that. I just don't know. I don't know what the answer is off the top of my head, and there certainly has been no guidance on that that's come out of Treasury.
Okay, and then another question, this is very important specifically for the PPP program, is you need to make the application through a bank, through a specific SBA lender, of which most banks are. I don't want to say most banks. I haven't checked every bank to see who is and isn't, but there are many online lenders. Renaissance Bank was nice enough to participate in this call, but there are many other SBA lenders who can process the Paycheck Protection Plan, and they need to be who you apply through. The other emergency declaration program, as I think was mentioned, is a direct to SBA program applications, as I remember.
That's right.
All right, well, if there are additional questions, we might consent on for a couple more minutes, Matthew, if that's okay with you, but I'm going to go ahead and stop the recording and thank everyone for participating. We want to keep this to the time frame we agreed to. Thank you so much for participating. Again, this webinar will be saved to the cloud to be able to be viewed later. So if you have anyone who was shut out by the limit of our webinar could only handle 100 people, please do share this link, and it will be linked directly from our website as well. Thank you so much, Bill and Matthew, for your help and participation in this, and thank you everyone for being on the call today.
All right, thanks everybody.